Welcome everybody. So I want to do more YouTube, and instead of thinking about it too much, I'm doing it today. And because we have had like so historical big movements on the market, and everybody's talking about that unwinding of the yen carry trade and what exactly that means, and what do I think, and what we should pay attention to. These are the things I want to share with you here in a short video. We don't want to make this too long. My plan is to continue to give you like market narrative reviews and ideas and suggestions of what I see here, and in order to not be completely blind about the market. Because again, as you know, my name is Alex Duvidari. I have a background as a hedge fund manager, and my credo is basically data-based trading, rules-based. So I don't like gambling. I have nothing to do with all that new school trading, gamification type of stuff. I want to understand why I'm doing what, and I need data for that. And today, you see, we had really crazy moves. This is the S&P 500. You can see that in the recent days, we like went down really bad, especially recently. We had like big gap here, and we see like big volatility. You see like first this big gap, now big recovery. Yesterday down, today back up. Like what's going on here, And obviously, stock markets on the long term seem to be up only. But especially here, there's a lot going on. And I think the easiest way to do that is I found, or Jim Bianco, I think he's a great guy. He does really good work, that we go through that and just I try to explain it in more simple terms. So what happened in the financial markets? Because he says not all sharp moves in financial markets are driven by rapid changes in economic outlook. That's absolutely not the case here. What happened is that unexpected changes in the financial structure of markets can force repricing. That's what happened. Because what happened last week is that the Bank of Japan, out of nowhere, literally, blindsided everyone, sucker punched everyone, and raised interest rates. You can see here, it hiked rates to 0.25%. You would say like that's not a lot, but it's the highest rate since 2008. Just think about that for a second, okay? For how much time the Bank of Japan has not done something like that. And if you look at the dollar yen trade, that's just like insane, like what happened here. Look, we went all the way, like in a straight move, more or less, from 162 to 142, and now, okay, it's like bouncing back a little bit. Like this volatility is really bad because, Forex doesn't move that strong normally. So, yeah, that has really rattled markets, as you can see. So what happened is here, there's surge of inflation in Japan. Like everywhere in the world, we have the situation that inflation is like a sticky problem. Now, Japan, because they have been doing zero interest rate, and they're the ones that started yield curve control. Basically, this whole fiat Ponzi scheme sort of thing is the most progressed in Japan. The money printing, all of these things. Japan is basically patient zero. And they trying to battle a little bit the inflation and raised a little bit the interest rate. And that caused a big issue. Because only 29% expected of the Bloomberg poll here that the Bank of Japan would hike rates. Now, they hiked quite more than everybody expected. And that's basically what makes markets moves the most when there are news. It's not really the news per se that move the market, it's the difference of what happens to the expectation. And so, for example, if you look at the Fed fund futures, they're literally always what happens when the Fed meeting is, right? So that's why these surprises, they can, create big turmoil on the market. So overnight index swaps, they went up massively here. Surprise Bank of Japan hike led to one of the biggest unwinds in the yen carry trade. So the yen carry trade, I explained that also on my Instagram stories, is basically that a lot of traders, funds, whoever, like active participants on the market, they would borrow yen at zero rate, and then they would use these yen to buy dollars and buy treasuries to get basically interest rate from the US. Or they would buy stocks, or they would buy crypto. Supposedly Jump did that. That also led to the big crypto meltdown a few days ago. And that was now suddenly a trade that doesn't work anymore, because now the cost of capital for yen has increased to 0.25%. And now imagine you're looping, because what some people are also doing, you borrow yen, you sell for dollars, you buy a dollar asset, and then you borrow yen against that asset again. And you basically do this a couple of times to leverage yourself up. Like people do with real estate, like people do in DeFi. It's like very simple. Like wherever you can leverage a loop, people do it. But suddenly, On every one of these loops, your interest rate is now higher of the cost. And then also the yen got more expensive, right? The price of yen went up. So you got basically a double whammy in the face. First, the interest rate, the cost of the capital, and then the FX rate that changed both. So suddenly, whatever you were making in return on the dollar assets is not making up for it anymore. So people need to sell. And that supposedly also is what Jump had to do, Jump Crypto. That's why they sold massive amounts of Ethereum just on Sunday. That caused like quite a big crash. So here just Jim Bianco explains what the carry trade is, what I just did. And so essentially the yen has become something that we would call a funding currency, right? Because you can borrow it for zero. So you use it to fund other things, right? That's sort of what you're doing here. And this is causing a slump in foreign markets such as the US stock market, because now you need to pay it back. People need to pay their loans back. They need to pay the yen back. It's just too expensive to keep it going on. So that flushed out leverage a lot. Now, is that the end? Is now a crash coming? I personally would say not necessarily. Sure, there must be more unwinding, and we will see how much there will be, but then it's basically like a crypto washout. You see these cascadations of with people that trade and leverage. Like Charlie Munger said, liquor, leverage, and ladies make smart people go broke. And that's always been like that, so that's why I don't think that this is the end of the stock market. Would I buy into the market very now? I'd be cautious. I'd be still looking to see what happens. Supposedly today is a Fed emergency meeting. There's voices that say that it might even cut rates 0.75%. I would be surprised if they did that, because imagine that would hurt the carry trade even more, because that would mean that dollar assets yield even less, right? So the yen got more expensive and the dollar makes less return. So that would lead to a more unwinding of that carry trade, right? So that's something I'm not so sure the Fed will be doing. So what I would do is look for assets that are quality, that you want to hold over the long term. So technically, Bitcoin is also at quite a crossroad here, if you ask me, because if you look at it on a daily basis, these wicks, they're typically very, very dangerous. We see a lot of times wick fills taking place. So, and we see here that this was also like a support area in February before we had this big all-time high move. If Bitcoin doesn't manage to claim like 60K and more, we could see a waterfall move down here, especially if the Fed cuts. I don't think that means for crypto, hey, we're just going to go up. It will blindside people again. A lot of people will get caught up in like a bull trap, and then it's more likely that we will see prices come down around the 40K levels here, is what my expectation would be. Nonetheless, accumulating Bitcoin, because it's long-term a great asset, if you understand what it is, in my opinion, is a great thing. So I'd be happily buying it around here. And even at these levels, just start nibble a little bit is probably not a bad idea. Obviously, there's other assets, Solana. We have to say that Solana this year proved all the people that thought it was the Sam Bankman-Fried coin wrong, very wrong. It's a lot more than that. This year it had the meme coin narratives, right? And DeFi is not as much big of a thing as it used to be, but still it's a very cheap and fast blockchain. It has a lot of users. It has the number of users and wallets is growing. So in all things considered, it's basically a good chain that you should pay attention to if you're looking for any L1s in your exposure. Obviously, the S&P continues to be the blue chip asset. People say like, okay, the Russell 2000 is now better. If the Fed cuts rates, then probably, the small caps will have a higher chance of going up. None of that is wrong, but it also comes with higher volatility and with higher risk. So nonetheless, if you DCA in these things and you buy quality assets, these washouts are welcome. Now, I don't think we're completely done just yet. So that's why I would be cautious. We have summer. It's, there's less liquidity in the market. There's less also need for something to happen in terms of interventions from the central bank. We'll see what the Fed's going to do. And that is like what I am looking at. Generally, I do think that the dollar that has been beaten down a lot has a higher chance of recovering than actually breaking down, because the other central banks, other than the Japanese, they're not doing any better. European economy, not better. British economy, not better. British, what we saw on the weekend now with all the fights going on there, neither politically nor society nor economically, it's really a better working place. So let's not forget, when things go south, when shit hit the fans, as they say, the dollar is also a risk of a safe haven currency that people will flock into. So I personally would look for strategic, interesting buys into the US dollar. And as I said, like DCA into quality assets that I want to hold for a long time. So we will continue to monitor the situation. That is what I wanted to share with you here. And if you like what we're doing here, then please also like, subscribe, share. You know, I'm trying to give you value. Share with me whatever you're interested in, what I should do videos about. And I look forward to seeing you the next time. Bye-bye.